Hello everyone, this is James O'Malley from Alpha Shark Trading, here to talk a little bit more about stock replacement strategies and how you can use them to deploy your capital in a more efficient and risk-effective way. So you guys have all had a chance to review our presentation from the other night about trading stock replacement strategies and learning a better way to trade stocks using options. And I want to show you guys exactly how you can take this concept and apply it in regular trading in pretty much any optionable security out there. So here we have the SPY, currently trading at 192.88. So I want to talk about a really easy way to figure out what a good long stock replacement strategy would be to get long the SPY. Now I'm not saying I think the market is going higher, I'm just using this as an example of how much more efficient trading this way can be. So let's take a look at the options that go out to June. They're about 121 days to expiration, right? So like as we said in the presentation, what I'm looking for is an option between a 75 and 80 delta. Okay, so I'm going to add some strikes here, and we're going to see what the market has to offer right now. So here we have the 174 strike calls that are trading with about a 78 delta. All right, and they're trading right now at $22.18. Let's just call that 22.20 even. All right, so now if a trader were to buy one of these call contracts, they'd be risking $2,220 per one lot to get long the SPY through June. Now these have a delta of about a 78. Let's call that 80. Now how much capital would it actually cost a trader to get into this position and have a representative position of 80 shares in the SPY? Well, it would cost them 80 shares times 192.88, which is about $15,430. It's a lot of capital, and even on margin, it's still going to require a trader to put up way more cash than this options position would. And what is the main benefit of this? Well, not only do we have a position that's going to behave very much like the stock. If the stock rallies $1, the SPY rallies $1, this thing will rally about 80 cents. But as it moves in my favor, this 78 delta will get larger and larger. As we go further and further down the options chain, we see that deltas become bigger and bigger. And the more in the money the option is, the more like stock it's going to be. So a 78 delta option is going to become a larger and larger position the more this position moves in my favor, which is a great example of why long stock replacement strategies can be a more capital effective way to trade a longer term view in something like the SPY. Now we're going to go over some more complicated strategies a little bit later on this week. In the meantime, keep your eyes open for more emails that we have forthcoming about this topic, and we will see you guys a little bit later on. Everyone have a fantastic evening, and as always, happy trading.